Good morning. Welcome to AMRO's press briefing today on the quarterly update of the ASEAN+3 Regional Economic Outlook, the AREO. I'm Daisy Wong with AMRO's communications team. We are delighted to have Dr. Hoiko and Mr. Alan Ng joining us as our speakers today. Dr. Ko is Chief Economist of AMRO, and Mr. Alan Ng leads the Regional Surveillance Group, and he is in charge of the AREO. Today, we'll start the briefing with a short presentation by Alan, and then we'll take your questions. And then just a very quick reminder on the embargo. As we speak, the embargo has just ended at 10:30 Singapore time. I think without further ado, I'll pass the mic to Alan for your presentation.
Thank you, Daisy.
Thank you.
Let me begin with the key highlights of our update this quarter. 3 key messages. First, solid growth. The region is on track to achieve steady growth this year and the next, and this will be underpinned by resilient domestic demand and the ongoing recovery in exports. Second, inflation in the region continues to ease. And third, the landscape of risk has continued to shift since the last update we had in July, with large uncertainties remaining, especially for the later part of this year and next year. Let me elaborate on each of these in turn. Starting with growth, domestic demand continues to be the main driver of growth in the region. Household consumption in most ASEAN economies have remained robust, supported by favorable employment conditions and moderating inflation. However, the situation in the +3 economies is somewhat more subdued. Meanwhile, investment activities are improving in the region, and this improvement is in tandem with the strengthening of external demand and improving industrial activity. On external demand, goods and services exports have provided additional boost to growth in the region. Goods exports have expanded in line with global growth and strong tech demand. Recent purchasing manager indices, PMIs, suggest continued exporter optimism, especially in some sectors such as automotive and tech. Tourism have continued to recover, reaching close to 90% of pre-pandemic levels on average for most of our regional economies. Chinese tourists, a very important source of tourists for most of the other regional economies, are now at about 2/3 of pre-pandemic levels, and this suggests further room of improvement going forward for tourism activities in the region. Now, zooming into the E&E sector, we see that the artificial intelligence or AI field semiconductor upcycle continuing, and this has supported the region's exports. Key players in the AI-related segments, such as Korea, continue to see the most significant improvement. But more importantly, we have also witnessed a sustained broadening of this trend beyond the frontier segments to other E&E products as well. And this is benefiting many other exporters in the region. Leading indicators suggest sustained demand for a wide range of E&E goods in line with the expectation of the overall improvement in exports in the region. Due to inflation, the core inflation has continued to moderate in line with the well-anchored inflation expectations within the region. Headline inflation, however, while remaining on a moderating trend throughout this year, saw some temporary spikes due to increases in shipping and energy prices. However, these spikes have abated in recent months. Now on regional financial conditions, despite the short-lived market turbulence in early August, financial conditions in the region are generally on an improving trend. And this is especially since the beginning of the US monetary easing cycle, and more recently, the announcements of a broad set of coordinated policy measures from China. However, I must add that this has somewhat been tempered in the last few days, given the escalation of geopolitical tensions in the Middle East. In any case, the performance of the region's equity and bond markets in the period under review are generally on a positive trend, and regional currencies vis-a-vis the US dollar have strengthened considerably since the last update we had in July. Now, let me share with you our latest forecast numbers. Growth for the ASEAN+3 is slightly lower at 4.2% this year, and this is due mainly to downward revision in the +3 sub-region, especially China. For ASEAN, growth is also slightly lower, and this is due to marginal downward revisions for Indonesia and Vietnam. However, we expect next year the region to experience improved growth to 4.4% from 4.2% this year, and 10 out of 14 economies are expected to experience higher growth. Now on our inflation projection for 2024, inflation for the region, excluding Laos and Myanmar, is expected to moderate to 1.9%. And is given, among others, the trends of lower food prices and also lower imported inflation. This is a downward revision from 2.1% in our July projection. Inflation is projected to see a slight uptick next year, given the strengthening growth outlook in the region. And this is also in line with the expected normalization of global inflationary trends going forward. And just to highlight, we have a special box in this update on regional inflation, exploring the degree of synchronization of inflation in the region and how inflation in the region moves in tandem with global prices. The key findings, we find that inflation in the region are quite synchronized, especially in the more recent period. And we also see that the correlation between prices in China and the rest of the region have strengthened, especially when we look at producer and trade prices. Now on the risk to the outlook, as I've mentioned earlier, the risk landscape has shifted since the last update. Large uncertainties remain. Now this is our risk map, and with some of the key risk events that we have identified. In the interest of time, let me just elaborate on two of them, both of which are new compared to the previous update. The first is the risk of a sharp increase in financial market volatility, similar to those that we have witnessed in early August, or perhaps even worse. And this is really given the fact that we have seen increased sensitivity of markets to the more data-dependent phase of monetary policies in the major economies, such as the US Fed. And hence, we cannot rule out the possible large adjustment in financial markets that could potentially affect the market functioning of the region. However, we have assigned the impact of such a risk event to be low, given the relative soundness of our financial system and external positions in the region. The second real risk is the possible intensification of aggressive protectionist policy post-US presidential election. For this risk, we actually ran a qualitative scenario assessment on how such an escalation could affect the region's outlook. To summarize our assessment, we found that in the worst case scenario, a severe escalation of protectionist measures in the form of higher tariff and broader tariffs as proposed by one of the presidential candidates, and with the proportionate retaliations by other economies, this could actually lower the region's growth by almost a full 1 percentage point. And this would result in the lowest growth for the region since the Asian financial crisis, except for the pandemic years. And I would like to add that these estimates are likely to be conservative, and the possible outcomes could be even more severe. This is because the estimates are based on models, and we look at historical trends and elasticities, and we do not take into possible account of non-linear impacts of such an unprecedented scenario. Secondly, we also do not take into account possible second-order impacts of such a measure, such as, for example, disorderly redirection of trades or possible severe negative impacts to sentiments. But the bottom line is this, that an escalation of protectionist measures coming from the US will have a significant impact to the region, and this is something that we will continue to monitor very closely. With this, let me end my presentation by reiterating the three key messages again on our outlook for the region this time. Expect solid growth for the region for the remaining of this year and next year. Inflation continues to ease. However, this outlook, we are continuing to be looking at large uncertainties ahead. I will stop here. Thank you.
Okay. Thank you, Alan, for the presentation. We have received quite a lot of questions from you in advance. Let us start with them first, but please feel free to send us more questions in the WebEx chat box. Okay. There's a question on the broad outlook. Why have you revised down regional growth forecast for 2024? And why does growth improve to 4.4% in 2025?
Thank you, Daisy. Well, as you can see from Alan's presentation, we have shaved growth down for ASEAN+3 region from 4.4 to 4.2%. And this is mainly on account of China and Vietnam, basically. I can see that we were relatively optimistic about China. We had it at 5.3 in our last update, and this time we shaved it down to 5. And the reason is because at that time, we still expect that the real estate sector would sort of bottom out by the end of the year. But now, after doing a more analysis of the property cycle, it looks like the property cycle was going to be delayed until next year. So because of that, and then the numbers for July and August came out on the weak side. So that was about around the time of the third plenum, and we were still optimistic that the Chinese authorities would take measures to support the growth. So we decided to shave it down to 5% because the first half was 5%, and to achieve 5.3 would have been very tough if the third quarter turns out to be relatively weak. So that's the reason why China, is now at 5%, which is the target set by the authorities. And for Vietnam, we shaved it from 6.3 to 6.2 because of the Typhoon Yagi, which was one of the massive storms in a decade. It basically the losses were about 0.8 percentage points GDP, and so basically cut it down by 0.1 because the numbers for the third quarter apparently is quite strong, and we know that after the typhoon, there's going to be a lot of reconstruction and all that. So we basically pushed the growth to next year. So that's the main reason why we shaved down growth for this year from 4.4 to 4.2%. Let me stop here. Yeah.
Okay, thank you, Dr. Koh. There's a question on China. How do you think the recent stimulus measures announced by China will impact growth in China and the broader region?
Yeah, the stimulus package, as you know, was very large. It's been labeled as whatever it takes by Ray Dalio. Some of you may know him. And we shaved down our growth forecast before the stimulus package came out. So now we think there's a bit of upside to our growth forecast indeed. And this is very comprehensive, as you know. The PBOC basically cut interest rates, they cut the reserve ratio, and they also took measures to support the housing market and also the stock market as well. So I think that, as you can see, the market shifted from a bear market to a bull market overnight and rallied by about 25 percentage points. And in fact, even pull funds out of the other markets. Even so, I think the market is still well below its peak, as we know. But nevertheless, the strong rally in the asset market means that there could be a wealth effect. The public has turned a lot more optimistic about the outlook for the economy, and that is going to support the housing market. So we think that, as I mentioned earlier, we had thought the turnaround in the housing market may be sometime in the middle of next year. We think with this set of measures, there is likely to be a move forward. So we think the rally could be a bit earlier than what we had before, and there's upside to our forecast.
Thank you. There's a question on geopolitics, seeking comments on geopolitics. So it asks us for comment on the scenarios for the regional economy, depending on whether Harris or Trump wins the US election.
Yes, I think Alan already pointed out that we have done some similar analysis, and in the event of Trump wins the election, the protectionist measure is likely to be more severe, and that's going to shave off growth by about 1 percentage point from the region. So whereas in the event Harris win, it's likely to be a bit more of the same, and still it'll be a dampener on growth, but it'll be much lighter. So this is one of the big known unknown that we are facing, and we just have to see who wins, and it's going to be quite soon, November 6th, I think.
Okay. More on geopolitics. Question from the Wall Street Journal. Regarding the latest developments in the Middle East, what sort of threats does the risk of a wider regional conflict pose for Asian economies? And will the uncertainty generated derail any forecasts?
Yeah, I think the spillover from the widening of the conflict in the Middle East is likely to be indirect through higher oil prices or disruption in transportation. So far, I think it's been pretty well contained, even though everybody expect that it's going to get worse. But I think from what we have heard from the news, I think that everyone is trying to contain the conflict and prevent it from escalating too much. And in any case, we know that as long as the conflict remains contained within the Middle East, the spillover to the region is indirectly through oil prices and commodity prices, and also logistics. So we think the region is sufficiently robust to be able to withstand the escalation of the conflict.
Okay, thank you, Dr. Koh. We actually got quite a bit of questions on, country-specific questions. I think we'll start with the Philippines. Are there any changes to the growth forecasts for the Philippines? If yes, what is the reason for the adjustment, and what will drive Philippines' economic growth?
Yeah, we didn't change the forecast for the Philippines. As you can see from we still expect growth to be 6.1%, which will be an improvement from last year, 5.6%, and for next year 6.3%. And this is mainly because we expect government investment spending to be higher this year, together with services exports. So, like most of the other countries, Philippines went through a bad patch last year. Interest rate was pretty high. And the government has cut interest rate by 25 basis points, and has indicated that there's scope maybe for another cut, later this month. So I think the Philippines is well supported. We know that 6.1 is below the government's target, but it's still among the strongest in the region, as you can see.
Okay. There's another question from the Philippine Star. Do you expect the BSP to further cut rates at its policy meeting this month? And if yes, by how much?
Well, as I mentioned just now, the government himself has indicated that there's potential for further cut of 25 basis points, but he's going to wait until, and look at the numbers on the inflation. So far, inflation has behaved pretty well. It spiked up in July, and then it came back down in August. And our expectation is that it will continue to trend down. And for the whole year, our forecast for inflation is 3.3, right? So I think that's. I think if it continues to trend down, you provide room for the BSP to cut rates further.
Okay, thank you. I think we need to switch to Japan. The Bank of Japan raised policy rate in July and kept it unchanged in September. What are your views on BOJ's monetary policy?
I think the BOJ has managed the normalization of their monetary policy framework very well. It started by they're moving away from the YCC yield curve control, and then they started to widen the band on the overnight rate, and most recently they moved from negative to 0, and more recently they raised it by So the monetary policy basically has been normalized now, and as the governor indicated, he's been very cautious. He wants to make sure that, the 2% is pretty well entrenched and anchored before we move again. And I think that's pretty wise. There's really no reason to rush. And the indications are that the 2% inflation has become quite well anchored because wages are rising. Last year, as you know, wages rose but quite significantly. And again, this year, the expectation is that wages will continue to rise. So we've now gotten into a virtuous, wage price spiral, which will help to support the inflation. And that will then provide room for the BOJ to move further if the need arises.
Okay. Continue on monetary policy, but on the broader outlook. Do you expect regional economies to enter a monetary policy easing cycle following the Fed's rate cut?
Well, certainly the Fed rate cut has provided more flexibility for regional central bank to move the rates if they need to. And we already see that happening, with some of the central bank. But whether they move or not very much depends on their, specific country situation. So we know that, as I mentioned earlier, the BSP has cut the rate by 25 basis points, even before the Fed cuts rate. And more recently, BI has also cut its rate by 25 basis points because inflation has come below its target, even 1.83, I believe. So the lowering of the Fed has provided that flexibility. I think that holding back some of the central bank, and of course we know more recently, PBOC has cut its policy rate by 20 to 30 basis points. But some of the other central bank, on the other hand, have decided to stay put. For instance, Malaysia is hanging on to 3%, I think. And that's because the economy is doing very well. Inflation is still pretty low, and there's no reason for them to cut rate. But certainly, I think most of the central bank welcome the cut in the Fed policy rate.
Thank you, Dr. Koh. We got some questions from the Malaysian press, including Berita Harian and Bernama. They want to ask about Malaysia's economic outlook. The questions are, what are the outlook for Malaysia's economy in 2024? Do you anticipate that the economy will exceed the official growth target of 4 to 5%?
Yeah, we have kept the Malaysia's growth rate at 4.7%, which is pretty high, and increasing to 4.9%. Malaysia, as you know, is doing pretty well in terms of growth. It's attracting a lot of investment, and inflation is still quite low. But obviously, there is potential for Malaysia to do better than that, and that's possible because if the implementation of the investment was stronger than what we had factored in, then I think the growth rate could be somewhat higher than what we have at 4.7%.
Okay. How do you foresee the performance of the Malaysian ringgit? Do you expect the ringgit to continue strengthening, and could other factors affect its stability?
Yeah, Malaysian ringgit was one of the worst performing currency last year and until quite recently, and now it's one of the best performing currency. So it shifted from 4.79 to 4.16, and we expect it to remain actually quite strong. As I mentioned, it's attracting a lot of funds inflow, but also it's persuaded some of the Malaysian investment corporation to repatriate their investment earnings. So that has also helped to support the currency. And along with that, there's also the cut in the US Fed rate. As we know, one of the drivers of exchange rate is the carry trade, the differential between the US rate and the Malaysian ringgit policy rate. So that differential has narrowed, and that has supported the ringgit for sure. So I think on the exchange rate, the Malaysian ringgit is pretty strong, although I think in the last few days it depreciated a little bit because of the indication from the Fed that it's not going to, it may not cut rate further.
Okay, thank you, Dr. Koh. Malaysia's budget 2025 will be tabled on October 18th. What are your expectations for this budget? What should the government prioritize to ensure sustained economic growth benefiting both the people and businesses?
Yeah, we just completed our annual consultation with Malaysia. And our view is that the economy is doing very well. The growth is very strong. Inflation is low. And so they should take the opportunity to rebuild the policy space. As you know, they ran a pretty large deficit during the pandemic. And so they've used up some fiscal space, and the debt ratio is pretty high. So this is really a good opportunity to consolidate and basically rationalize the subsidies that was put in, basically cap inflation, and it was very effective in keeping inflation down. But I think now it's time to to make the subsidies more targeted, because it was fairly a broad subsidy. So with that, I think they can help to rebuild the fiscal space. I think the other area where we hope that they'll do more is in terms of investment spending to improve the competitiveness of the economy. We know that Malaysia is now trying to move up the value chain in terms of the manufacturing sector, to the next level. And they have announced that they're going to spend more on infrastructure, especially to upgrade in the electronic sector. There's a shortage of skilled labor, and so that's another area where we believe the government can do more to try to meet the shortage.
Okay, thank you. Another question from the Malaysian press, The Edge, is on inflation for the inflation outlook for the region. Since you mentioned inflation dynamics co-moves with Chinese export prices more close to after the pandemic, will China's mega stimulus spark a revival in inflation to ASEAN?
China is very competitive, as we know, especially in some products like EVs, solar panel. So because of that, the prices are on the low side, and that is actually helping a lot of countries to keep inflation down. So that's a positive thing. Although we know that other countries, are having a problem trying to compete with Chinese EVs, and for them they have slapped on some protectionist measures. But there are also other products, that are contributing to some disruption in the countries in the region. For instance, steel export from China, is also the steel prices are low partly because of the construction industry in China. The demand for steel has gone down, and so we have seen that some of this steel has ended up exported to other countries and putting pressure on the steel industry. And those countries have taken measures to try to keep to protect their own steel industry. So it's a little mixed, but overall, our sense is that the impact of China on global economy generally, because of the competitiveness of the products, is a positive contribution, because it's going to keep inflation down, and and it also help in terms of the for many countries in terms of the climate mitigation measures, because the renewable energy products will be much cheaper as well.
Thank you. Question from the China press on regional currency. Which regional currency do you foresee to be strong, and which countries do you think will outperform?
Well, I think this year we expect most of the countries, the growth to be somewhat stronger, except for, in the case of the region, we had shaved down a few countries. But some of the countries are still, despite the robust growth, it's still relatively uneven. Particularly the real estate sector, we know for sure in China, the real estate is going through a cycle. But it's not only China. Some of the other countries are also having the same, going through the soft patch in the real estate. In particular, Vietnam, Cambodia, and also Korea to some extent. So these are countries where growth is a bit weaker than it would have been if not for the real estate downturn correction. But we expect, which is another reason why we expect next year growth to be somewhat stronger, because this year is still basically a recovery year for some of the sectors in the economy. And next year, we think that most of the countries will normalize in terms of their growth performance.
Thank you, Dr. Koh. I think we move to Cambodia questions. There are also quite a bit of questions from the Cambodian media. What are the bright spots or opportunities for Cambodia that Cambodia can capitalize on amid the current economic conditions? And Cambodia's 2024 inflation revision is significant. What's driving that as well as next year's?
Well, Cambodia is, we are projecting 5.6% growth. It's below the pre-pandemic level. But there's been a lot of scarring in Cambodia, but the economy has been relatively resilient, and because of that, they actually did quite well last year, even 5.5%, and this year they grew by 5.6%. The government sector and even has recovered, is growing strongly now. That was hit quite badly last year, and also the return of tourism. I think tourism is almost back to pre-crisis level now for Cambodia. And now they have a new airport in Siem Reap. So we expect that tourism is going to do even better going forward. And infrastructure, I think the government has announced an infrastructure program. So that will also help to boost the economy. So we are actually very optimistic about Cambodia's prospect going forward.
Okay, thank you, Dr. Koh. One more question on Cambodia. Do you expect protectionist measures impacting Cambodia's key exports? That is the garment, footwear, and travel goods sector. We have seen how higher anti-dumping tax has impacted exports of solar panels and modules from Southeast Asia, and especially Cambodia. So do you expect protectionist measures after the US election impacting its exports?
Yeah, it depends on the sectors. As I mentioned, garment, footwear, those sectors are doing very well right now. Travel goods included. Even though the EU, for instance, has withdrew its everything but arms preferential tariff, and also the expiration of the US GSP. That has not affected the export of those products at all. On the other hand, solar panel export was very strong last year, and this year, because the US has slapped the tariff on the solar export for some of the ASEAN countries, we expect that's going to be affected because of that. So on the other hand, I think there's potential for Cambodia to export the solar panel to other countries beyond just the US. So to make up for the lost market. So overall, I think Cambodia is diversifying into other sectors, and we expect that to do relatively well.
Thank you. There are a couple questions on Thailand and Indonesia. Let me start with the Thailand first. It's a question from the Business Times. Thailand was the only economy with an upward revision. Why was Thailand's growth projection pumped up to 2.8% from 2.7%?
Yeah, Thailand's growth was revised up because, as we all know, they have the digital wallet, which was held back. But starting this year, and towards the end of this year, September, I think they have disbursed the money for the digital wallet. It's quite a big package, although it's been cut down somewhat. Still, if the impact of the package will be on this year and next year. So it's a sort of a stimulus to the economy from the fiscal spending, and also so for next year, we expect growth to pick up even further to 3.3% because we expect investment to also kick in. So because of that, we expect growth to pick up from 2.7 this year, 2.8, and then to 3.3% next year.
I can just add on to this.
Yeah.
Is that
Yeah.
so our baseline forecast projection for Thailand is such that we will continue to see improvement in the underlying economy. This will be supported by recovery in tourism as well as the continuation of government disbursement that would be supporting growth this year. On digital wallet, previously we didn't actually build in the digital wallet in our projection, given the uncertainty in the design and the implementation of the scheme. So this round, given that we have clarity on how it will be implemented, so we have actually incorporated the digital wallet into our forecast. And given what we have in terms of the numbers for the digital wallet, the growth impact that we have is actually about 0.6% of GDP spread over 2024 and 2025, hence explaining the bump in the forecast from 2.7 to 2.8 this year and from 3% to 3.3% next year.
Okay. Thank you, Dr. Koh and Alan. Indonesia. What factors led to Indonesia's growth forecast being revised downwards in 2024? And how do you see Indonesia's growth outlook in 2025?
Yeah. I mean, the downward revision of Indonesia is fairly technical. It's a second decimal point issue. Indonesia is one of the most resilient economy in the region. It's been growing at slightly above 5% in the last few years. We know that, and for next year, we are expecting growth to be around 5.2, which is around the potential growth. And because it has been growing at the potential growth rate, inflation has come off, as we know, as I mentioned earlier, it's come down to below even the target level now, which has provided scope for Indonesian BI, to cut rates. So it's possible that for next year, domestic demand might be somewhat stronger, and also with the new government in place, and they have a relatively ambitious infrastructure plan. That infrastructure spending could also be higher. So I would say that there may be upside risk for Indonesia next year. But this year, the slight decline in the growth rate is purely technical in our view.
Okay, thank you. Okay, there's a question on what are the major risks you are concerned about the region?
What are the
The major risks that you are concerned about the region? So it's a broad question, yeah. Major risks.
Yeah, so I think I mentioned at the beginning, the known unknown, which is the US presidential election, and whether that's going to lead to more protectionist measure, especially, I think if the protectionist measure is quite extreme, it can shave the growth off quite a bit. There's also a small risk that of a sharp slowdown in the US. We put that as a low likelihood. That's because the PMI numbers for the US is weakening, and similarly for Europe has not been doing that well. So I think the risk is still small, but it has increased somewhat. And then, of course, there's the Middle East crisis, conflict which is escalating, and that could lead to a sharp spike in commodity prices. So that, if that happens, it's a supply shock. But, central bank may be forced to take measures to curb the increase in prices. And that could also lead to disruption in commodity and shipping prices. So those are the major risks. The one that we showed there on slower growth in China, I think I would lower that to low now, given the massive fiscal stimulus package that they just announced. So as I mentioned earlier, I think the risk is now on the upside rather than on the downside.
Okay.
If I can just add on that point, I think this is in response to the question by the Edge as well earlier on inflation. I think the key risk that would derail our forecast for inflation is not so much prices from China, if anything, is the other way around. I think the key risk that could derail our inflation forecast and potentially make it higher than what we have anticipated is actually the spike in commodity and shipping prices. So that is the key risk when it comes to inflation.
Thank you. I think we only have time for the last question is on ASEAN's inflation. So a question from Business World: what led to the upward revision of the ASEAN's inflation target for 2025 from 4.9% to 4.9% from 4.4%?
Oh, the upward revision, as you can see from our forecast, the one that we have revised up is Myanmar and Thailand. So instead of 4.4, we have revised it up to 4.9%. So, on the other hand, if you look at ASEAN minus Laos and Myanmar, actually we have lowered the inflation forecast from 2.5 to 2.4. So overall, I mean, inflation is not an issue in the region. It's pretty well anchored, and because of that, it has actually provided central bank with a lot of flexibility and room. So that's not a big concern for us. I think where we see high inflation is because of Myanmar and Laos, where the exchange rate is depreciated quite a bit, and it's a pass through from there. But I think in the case of Laos, they have taken a lot of measures to try to curb the depreciation, and we are very hopeful that the inflation will be lower than what we have forecast.
And just to add, for ASEAN, the inflation forecast, if you exclude Laos and Myanmar, we are looking at just a very minor increase in very minor uptick in inflation for 2025, and a lot of this has to do with the improvement forecast increase for some of the countries which have actually quite low inflation. Like for Thailand, I mean, you're looking at 0.7 to 1.5. Right, so these are some of the reasons underlying the slight increase in ASEAN forecast for inflation.
Thank you, Alan and Dr. Koh. I'm afraid I have to conclude today's press briefing here. Although we got a lot of questions from you, if we could not address them, please do contact AMRO's communications team again. And then for more details of the ARIO report, you can make use of the QR code on this screen to download the ARIO report. And also another reminder that AMRO will launch another flagship report called the ASEAN+3 Financial Stability Report next Thursday. And we hope you can join our press conference in person or online. It's at 10 a.m. on October 10th. So it's 10-10-10. Thank you once again for your participation. Thank you, Dr. Koh, and thank you, Alan.
Thank you.
Thank you.